Hello, everyone. Thank you for joining us today for Domi Stations. We've got a great seminar going on today. It's actually a webinar that we are switching up a little bit here. It's the Financial Stress Test webinar. And joining me is Ime Hutt. Thank you so much for being here.
Hi, I'm glad to be here.
So we are excited to be launching this today, and we definitely want people to engage with us, post their comments, and also ask questions for Ime, because I think we're going to have a lot of questions in regards to how we chart this uncharted territory. So we are actually going to talk about how you can learn how to plan for an uncertain future by modeling financial scenarios in Microsoft Excel. And in this session, we will translate an income statement report into a financial model that can be used for forecasting. And you can create multiple scenarios with this, from this model to evaluate the range of possible financial outcomes for your business. And Ime Hutt, she is the president of Golden Lighting and also board chair for Domi Station. So we're excited for you to help us out with this, because I know it can be very stressful for people financially.
Thank you. Welcome to my stress test webinar. This came out of several conversations I've had with my friends, fellow business owners, as we were talking about what we were doing about the coronavirus crisis and all the uncertainty around finances for our businesses, of the shutdown and getting PPP loans, and how do we figure this out? And there's so many variables in play. And for myself, I had these feelings being very stressed out because there were too many unknowns. And how do you plan for a future that you don't know? And particularly scary is with finances and not knowing, like, many of us are in a shutdown, can't have our doors open, and not knowing when we're going to be able to reopen. So how do you make payroll? How do we make decisions on how what type of loans to apply for and what to do? And one technique I use for myself is trying to put a box around financial uncertainty by running scenarios through a stress test. And banks do this. They do stress tests. Financial planners do stress tests on your personal portfolio. They can run through hundreds of different scenarios to make sure, am I financially healthy, and can my business survive through any type of situation? You can run stress tests through your own business, and I find them particularly helpful. You can run them in either direction. They don't have to be negative. Like, you can run a scenario that is really negative, or you can run a scenario that is positive. And that's why there's a whole range of outcomes. And I find that this technique is very useful with planning and budgeting. So I'll run through this. Today we're gonna, I have a worksheet that I'm gonna be working on that you will be able to see and kind of show how to create a stress test in practice. I also have a link published here in the chat where I have my notes on what is the thought process and logic for setting up these stress tests. And my hope is that you can go through this example I have on the screen, and later use my notes and use the workbook or Excel workbook on your own to kind of take a deeper look at how I set up the formulas and the sheets and how they link to each other, and then try it yourself. And of course, I'm available if you have any questions afterwards. So let me just dive right in. So I took a an imaginary company. I put them together, ABC company, and I downloaded the income statement off of a QuickBooks. And what I do is I take a year's worth of data and download the monthly income statement. I'm sorry, let me back up a little bit. So a little bit more on the financial stress test. It provides certainty and clarity. Once you see the worst case scenarios, you can make decisions and plan for a new normal. And it can be as rough or as detailed as you like. And in my company, I use very, very detailed scenarios and financial modeling, but you can also do one kind of back of the envelope, really quick, down and dirty kind of stress test as well. And like I said before, these can be used for budgeting, raising money, or for applying for loans. So back to this sheet I have popped up here, I downloaded an income statement off of QuickBooks for ABC Company for the past 12 rolling months through March. So from April 2019 through March 2020. And I downloaded the data, and what I do is I create it into and import it into an Excel worksheet. And I rename this tab into baseline data. And I kind of don't touch it. I just have this as a reference point. And then I make a copy of this tab. You can create a copy and create a new sheet of the same information, and I rename it as a formatted tab. And this is where we're going to do the first manipulation of the data. So one of the first things I did was I reorganized the income statement into two types of expenses. You have fixed expenses and you have variable expenses. And variable costs or anything I would put into cost of sales, things that would change with how much you sell. So if you sell more, your variable costs will probably increase. You'll have more expenses related to selling. And if you sell less, then you'll have less variable costs. So things that change with your sales. And it's very important to organize your expenses in those two parts. And then once I've kind of reorganized the income statement, so you can see here, I have my cost of sales, which are all of my variable expenses put together. And then below that, I put all my fixed expenses. I put salaries together and other types of fixed expenses like rent or utilities or things that kind of happen regardless if I have sales or not. Once I do that, I create a new column for each one of my monthly expenses right here. So here in April 2019, I created a new column here that calculates the percent of this amount divided by my total income. So here on this line, this product cost is 37% of my total income. And I do that for all of my expenses, all of the lines in my income statement, because I want to see I want to see those trends to help me set up my model in the next step. The reason why I download these expenses in this income statement by month is it's helpful to see the trends over time. If you download just the total value for the year, it's kind of hard. Sometimes maybe you have some months where sales are a little bit lower, like for instance, some of the restaurants in this area in the summer months tend to be slower. Or maybe if you have a retail store, Christmas time, you're going to have a lot of sales during that. So sometimes your revenues fluctuate with the season, and then your corresponding variable costs or your fixed costs may also change too. So it's nice to be able to see that all on one page through time for the year. So once you set up the percentages of these amounts over your total income in a column for each one of your monthly expenses, then it is time to set up the formulas. So when you download these income statements, you can get a value for, let's just say, total income. Instead of putting the value here, I created it as a sum. So I make this a working worksheet. And so I convert all of my subtotals into a formula. So if you look in this cell value of B13, you can see my formula up here is the sum of all of the income lines populates this cell. And I do that across all months for income. And I also create subtotals for my cost of sales here. So you can see this formula sums up, oops, I guess it did not. Oh, I found a mistake. So here, I sum the costs across. So here, sum of B15 to B20 in this column. And I populate this across the all of the months. Oh, wow. My costs are a lot higher. Okay. And then I calculate gross profit, which is your income minus your cost of sales, and put in that formula. I sum up my other fixed expenses, like major category of salaries, and then also for my total fixed expenses. And then I add up all my fixed expenses, which becomes the total operating expense. And then I calculate the net operating expense income, which is your gross profit minus your operating expenses. And then I have things below the line that aren't related to operations. For instance, I might have special income from my credit card or depreciation expenses, interest expense. I set up this income statement according to EBITDA, earnings before interest, taxes, depreciation, and amortization. So I put those interest, taxes, those non-operating expenses below the operating income. And then, of course, I do the subtotals for those major categories. And then I create a net income, net other income, and net income. Once I put those formulas in place for the first column, then I populate that out for the rest of the monthly columns. And then now I have a working model. This is what I would call a financial model. So this spreadsheet has live formulas in it, and it can change with whatever changes I make to it. So it's really worthwhile to go through to this step of putting in the formulas for all of the subtotals in the spreadsheet. So once you do that, you're ready to create a baseline model. So, so I moved from my formatted tab down here. I create a copy of the formatted tab and create a new one. And I will rename that new tab baseline model. And so what I do here is now I have a living, breathing worksheet that can change with whatever I put in here. I want to start modeling behavior going forward. So one of the first things I do is I want to calculate break-even revenue. So if you scroll over to the right, you'll see I created this little calculation here where this is my gross margin. My gross margin is 67.5%. And break-even revenue is where you take your total operating expenses divided by your gross margin, and it tells you the break-even revenue you need to break even. This is a useful number to know, especially if you're modeling some losses going forward. It's like if I how much do I need to cut in my fixed expenses to be able to hit a new lower break-even revenue. Like let's just say I expect my revenue to be cut in half. So what is my new, how much expenses do I need to cut to meet that new revenue target? So this calculation is really, really helpful to have on the side just for reference. So I did that. And then what I do is I start replacing my variable costs. So remember how we separated expenses from fixed costs and variable costs, and we created formulas for all the subtotals. Now we're going to start modeling the behavior of these variable expenses. So you can see it copied over the value. Originally, we copied over the value from here on the product costs. And let's just say I want to model that for the next year. I can take the average cost for the year for this line. And if I moved over to the total, I say for the year, on average, my product cost has been 39.61% of my total revenue. And so I can take this percent and replace this value right here. So 39.61% is 0.3961, and multiply that percent times the revenue for the month. So that's my new calculation for product cost And I can do the same type of analysis for each one of my variable costs. So my credit card processing fees on average for the last rolling year was 1.92%. So I could say this is 1.92% of my revenue, and create a formula for each one of my variable costs. So once I create the formula and replace those values with that formula, I can propagate that formula across the whole year. And now I have variable costs that are as a formula that can change with whatever I change my revenue on top. So they're tied together. Okay, now once I do that, okay, so on the next sheet of my notes, I put in there how I did the calculation for the formula for the product cost as a percent of revenue. And so now my baseline model is ready. I am going to copy the sheet again and create a new sheet, and I'm going to rename it called Test 1. And I changed the date to forward facing 1 year. So this used to say April 2019. I changed this to April 2020 and moved it along forward for 12 months. I also added a new header row in row 4 called Sales Effect. And what I want to do is show what kind of percent change in sales I expect for that month for the future. And this is off of 100%. So if I had 100% of sales, then I would say I had no change. So I put 0 in there. But for me, I'm shut down. So I'm gonna say I'm gonna lose 99% of my sales. If I put 100, it will like have a really I'll show you. It will like mess up my formulas. So I don't put 100. I just model. I lost like 99%. This is just an example. You can put whatever percentage you want in here, but this is so neat. So you have a row that you could use to play around with different percentages for how much of a sales increase or sales.
And I think we're having a connection here.
Okay. A question? Someone has a question?
We just had a little loss of connection, but we're back at it.
Okay. I'll rewind a little bit. So I created a row called Sales Effects, which is what you want to do what you expect your sales to change for that month going forward. So if you expect no change, you put a 0% on there. I don't expect any change. Or if I expect a 50% drop, I put a minus 50%. And that's the value I put in that row. So once I created that row, I need to now change the revenue line items on this model to change with these percentages. And so what I do is I put in a new formula. So I've clicked on cell B7, and up here, I don't know if you can see, it says multiply B7 times 1 plus the change I see in sales effect. And once I do that, that will change this value to whatever, this will change with whatever sales effect value I have. Now, you saw me copy a lot of sheets. I'm actually pointing this value to the original baseline model tab. So this is saying, go to April 2019 B7 cell and multiply that by a 50% drop. And so that's why you copy and paste like all these sheets. So one, if you want to change their fundamental model, you're not using live data with it. You can create many instances of models off of one thing. So I just make all of these revenue lines dynamic with the sales effect percentage I put on top. And you maybe a percentage isn't relevant for you. Maybe you have a contract, or maybe you have something that's not like as simple to put as I know I'm gonna have a 25% drop, or I know I'm gonna have a 75% drop. You can just arbitrarily type in a number here for the month. But for me, because I have so much uncertainty and I don't know if I'm going to have a 75% drop, 100% drop, or 20% drop, I find it useful to use percentages. And that's also why we set this up as a monthly projection, because I don't know how long a drop will last. And maybe it may be a gradual drop or a quick drop, or it may be a long lasting drop. Maybe I could say, I'm going to have a 50% drop for 3 months straight. And then when they finally say I can reopen in June, I might bounce back a little. Maybe it'll only be a 25% drop. So this model is really flexible and allows you a lot of ability to run different types of scenarios. And my tip for you is to run multiple models. So here I put in like a really doom and gloom one.
Oh no.
Oh my gosh, I'm like gonna have a 75% drop and I'm not gonna recover for a while. I put that in the scenario across the top. But I also created 4 other scenarios. I created test 1, test 2, test 3, test 4, where I can play around with these percentages. I can go even more severe with my sales drops, or I can be really optimistic and say, hey, I'm only going to drop 10%. Like it's not so bad. And it's going to be really short. We're going to bounce back really quickly. But the key is that you run as many scenarios as you think are realistic for your situation, and to have a range. And once you put all of the different scenarios together, you can create a summary sheet that kind of compares them side by side. And you eyeball it and you say, what's going to make sense for me? Like, realistically, is it going to be as bad as I think here? Or is it going to be better than I project in this one scenario? But what it does is it points out, hey, what are my triggers? like at a 50% drop, it's really dire. I need to make some actions with this because I'm going to lose a lot of money. Or, only at 10%, I think I can float along and it's going to be okay. This provides some clarity with like different types of situations that may come up. Like I said, you want to create multiple scenarios. I suggest that you run one where a sales effect can be drops of 10%, 30%, 50%. You can even do ones where you have sales increases. That's why I use these for budgeting, because at the end of the year, I don't know how the next year is going to be. It could be good or it could be bad. You can say, hey, I might be 10% down, or I might be 10% up. What does that look in my financial scenarios? I can compare the two and make sure that my fixed expenses are in line, can flex with either scenario. You can adjust, like I said, the duration of these drops or increases of sales. I suggest that you play around with 4-month intervals, 8-month intervals, and 12-month intervals. And study your business trends through the last recessions. Will your business experience the same effects that you experienced in previous recessions? Or will the current situation be different or more dramatic? So I created a summary sheet where I totaled all of the different tabs for the income statement. So I created a summary of baseline data, for formatted data, and then my baseline model, and then I did all my tests, and I put them all onto one sheet to just show the different scenarios. And you can see there are big differences in the revenues. Like in test one, I went from having $400,000 in sales down to less than 250. And even in test three, it was even more dire, only $160,000 of sales. Well, what did that have? How did that affect my costs? When I had lower sales, well, my cost of goods sold dropped. But my fixed expenses, wow, they are really out of line with what I'm bringing in. So what decisions do I need to make if this scenario comes true to adjusting my fixed expenses? So this is a great tool to help you look at those tough decisions. And compare the different models and select the one that you think is most likely to happen. And decide what are your revenue triggers for taking actions or making decisions. And if cuts are needed, I suggest, if cuts are needed with your fixed expenses, I suggest you start with the largest line items, of course. And there is another step you could take after this, which I'm a little bit afraid of going over in this session. It's a little more complicated. It's called a cash flow analysis, and you can also run use this stress test in conjunction with trying to understand what your cash is. And some things you need to understand about this income statement model is I run this one on an accrual basis and not as a cash basis. And so some expenses I might book in the month, but really I have terms with the vendor, like I get 30 days with someone, or I might put it on a credit card so I don't have to pay it right away. So your cash situation may look differently than what you put on this income statement. And then there's some things on your income statement that doesn't hit your bank account. Like for instance, like depreciation, that's like an accounting maneuver, right? Let's just say you want to take advantage of the utility deferral program by the city of Tallahassee. You still have that bill show up in that month and you log it on your income statement, but you don't necessarily have to pay it in that month. So you can create a copy of this in the new tab. Create, say, okay, these are my expenses for that month, but I might not pay that in cash. And so what I did was I looked on my balance sheet and I say, hey, my bank account, I've got $50,000 in it. I can take the net income that I make from my business for the month. And I like in that month, I'm going to lose $8,000. And I subtract that from my bank account. And then I add back in any of the expenses on this in this month that I think isn't really cash. It's just an accounting maneuver. Like, let's just say depreciation is a good example. I would put that in there. And then you can add other activities in the cash flow. For instance, I'm going to go get a loan. I applied for the PPP, or I'm going to go to the bank and get a loan. You can add cash to your bank account depending on what kind of activities you expect for that month. And then any loans, subtract any loan payments you might make from this list, and then this will give you your ending cash balance. And so what I did was a beginning cash minus plus or minus whatever cash I make from my operations for the month. And then I take out any of the non-cash expenses for the month, and then add in any financing activities like I get a loan or I make payments on a loan, and then that will net out what your ending cash balance is. And so this can be a helpful analysis on top of kind of figuring out, hey, how much money am I going to make for the year? Like, does taking a loan now make sense? What does that do to my bank account? And the way to tie those things together. So I know this was a mad sprint. It only took me 30 minutes to go through kind of a complicated a process, but I just wanted to give you guys an overview, just like the thought process and the logic for setting up a financial model for you to help you help you evaluate different scenarios you may encounter in your business. And if you don't have a CFO or finance person in your company to help you set up one of these or set up your budget, you're the person setting up the budget, I strongly recommend that you engage with a financial or accounting advisor to help you run some projections and make decisions about whether or not to take these loans or these programs that are being offered out there right now, and to help you evaluate those options. And of course, with this, once you've seen your summary of all the different scenarios, like for me in my business, I'm realizing, hey, I'm going to have to change my business up. I need to come up with some new models. I need to come up with new revenue streams because like my current one isn't going to cut it anymore. So I need to come up with some ideas. So it's just a nice, it's one analysis you can do for helping you develop some strategies for your business. So I'm going to turn it over.
Question for you, actually.
Okay, sure.
With fixed expenses, what do you recommend to cut first?
I like to start with the largest expenses, and those are different by company. A lot of times, I don't like saying this, but a lot of times the biggest expenses for companies is payroll. In my business, it's actually freight, but I have I mean, they're just different places. It's easier to try to make cuts for large line items than to make cuts everywhere in 1,000 different places, and it's really painful to manage. So it's just easier to predict when you can start with the largest expenses first.
And you had mentioned the loans, and there's a lot of uncertainty with, whether or not business owners are going to have to pay back certain loans. How do you put that in a Microsoft Excel sheet, or should you not even count those?
Oh, definitely as a next step after you do a financial stress test is you throw in the loan in there. So that's what I was trying to explain at the bottom. The last moment was how to do a little cash flow analysis. So here on the bottom of test one, I don't know if this is included on, this is kind of a new addition I made to this spreadsheet, but on the bottom of test one, I ran a really rudimentary cash flow analysis. And this is where I'm saying you could add in scenarios where you're putting in a loan. And so here I said, okay, I'm gonna get $15,000 from credit cards in April, just real quick cash. And then in June, I'm gonna apply for a federal loan. And this is what, oh, my bank account looks great. At the end I have 121,000, but how does that look through time? I'm still suffering some major losses here. I still need to fix my, what's fundamentally wrong with my business, because basically what the loan is doing is just buying me time, but I still need to make changes within my business so I can pay the loan back. Like with the PPP, maybe in this scenario, let's see, let me move you over. Let's just say, let's pretend that in April, this $15,000 was really a PPP loan. Like I got $15,000 for a PPP loan. I'm not making loan payments on it, and how it would show up is, and it doesn't show up on my income statement. How it would show up is maybe in June or July when it's forgiven, it shows up as I got an extra $15,000 forgiven on my PPP loan. Oh, that messed up. I need to put it as a formula.
It's a live stream.
Yeah.
Anything can happen when you're live.
So like you can run those loans in this. You just need to understand, I guess, the accounting principles behind it. Like, is that an income statement move, or is that something that goes on my balance sheet and I need to model it in this like cash flow thing that I have down here? I'm really hesitant to talk about cash flow because it's
I mean, that would be a good, tease for the next episode.
I think I might need to do that as a follow-up to this, because there's so many different scenarios for that, because people have accounts receivables. Maybe people don't pay them right away. Maybe you sell something to someone, services or product, but then they don't pay you for 30 days. So you gotta figure that in your cash flow. So, oh, I see a question on the bottom.
Yes, let me bring that up.
Okay.
And we have a question asking, is your actual cash value on the bottom?
I'm not too sure what you mean by on the bottom, but in test one, on the test one tab, sorry, I just lost you. Let me move this over. On the test one tab, for the month of April 20th, I looked on my balance sheet and I was like, okay, how much do I have in my bank account? And I put that number. I have $50,000 in my bank account. So I put that down as my beginning cash balance on cell B62 right here. You see right here? Mm-hmm. And then that's what cash I have on hand. And then that's at the beginning of the month. And then after all my activities for April, I lost $8,000. It will reduce how much cash I have on hand. I hope that answers your question.
And then as far as, I know this is a tough question to ask because it's really dependent on your business and specific to your business, but I know you had the breakdowns with percentages. When do you know which percentage where you know if your business is sustainable or not? How do you determine that?
That's a good question. Break even. So Well, that's a really, really good question. So what I do is I go on to the summary. So let's just say I went through test 1, test 2, test 3, and let's look at this. Like test 1, I had 247,000 in sales, and test 3, I had $163,000 in sales. Let's see what the break-even analysis said. So in this model, my operating expenses remain unchanged, and I needed to generate $400,000 in sales. So you can do the reverse of this. So you can say, instead of saying, what is my break-even revenue? You can say, how much sales do I need to bring in to generate enough income to meet my fixed expenses? That would be the inverse of this calculation. So the way I would do that is, let's see. Let me think through my math. I'm not so good at thinking on my feet with math. Let me think. How would I do that?
Neither am I.
So here in test 3, my fixed operating expenses got cut down a lot. So I cut down $100,000 or so, $125,000 in costs in this scenario. So I can divide fixed expenses divided by my gross margin, which is here. And it says I need to generate $269,000 in revenue to be able to meet that new fixed cost. And one way, I didn't talk about this because I'm assuming everybody's variable cost as a percentage is not going to change. You can change your variable costs. One common way that people can change their variable costs is how they change their pricing. So how much they charge for something. So you can you can increase your gross profit by increasing your prices. But in this type of economic situation, I don't know how much room you have to increase prices. Or you can change, like here, in my revenue, I have different products and services I sell. I could change my product mix a little bit and try to switch over to more profitable items, or put more marketing effort in promoting more profitable revenue streams that can increase my gross margin.
So really putting the focus on the moneymaker aspect, and maybe having other things just kind of fall by the wayside just for temporary.
That insight, that question was probably the biggest change in how I manage my business. That realization, you don't make money in controlling your fixed expenses. You make money by increasing your gross margin. So if you can figure out, like when we talk about prioritizing expenses, I said when you try to make cuts to your fixed expenses, you start with the largest line items. Like once you're done with that and you're trying to figure out how to make money, not just control costs, look at your variable costs and see what can I change here to improve the profit margin, the gross margin of that's how you make money. It's not in cutting people or changing rent. That's like a very short-term fix that buys you time. Mm-hmm. How you make money is figuring out your gross margin.
Do we have any questions right now for Ime? I know we have some comments. Damon Victor said, great question. I think a lot of people have that question on their mind right now, especially the length of time that they're losing money. I think that would be a nice question to ask as well too, is, and I know that it's variable with different businesses, but a rule of thumb, how many months or length of time can you lose money in order to survive in this type of environment and have to make that decision, you know, whether or not you're going to make it through? What can you do to prevent something like that from happening, having some sort of cushion, I would assume?
I think that there's no, rule of thumb. It's just like personally, right? They say you should have an emergency fund, reserves of a year. Well, if you look at my test one, I started off with $50,000 in my cash. If I'm losing money, okay, and my operating expenses here is 24,000, I have 2 months of time to figure out how to turn it around. Like, that's not enough time for me to resuscitate the business. Like, I need probably like 6 months to turn it around. Like, it's not easy to come up with a new business model, new customers, or completely new way. You need time, right? So the way I look at it is, how much time do I need to turn this around or wait this out or whatnot? Personally, I feel I need at least 6 months. But how can I make that money last longer is, okay, you're gonna have to cut those fixed expenses. So, I went from a $24,000 a month burn rate. If I could cut that in half to 12,000, then, this goes from 2 months to 4 months. And then if I can get a loan, whether it's PPP, EIDL, all those wonderful stimulus package loans out there, how much time does it buy me to try to think of something new?
We have a question here. Let me go ahead and put that up on the screen. Sole proprietors pay themselves taking draws as it relates to PPP forgiveness. How can we structure or record that type of salary payroll?
So I'm assuming that this is like, okay. See, that would be part of the cash flow analysis. I'm assuming this is like a S Corp type of situation where you take money after you report it to the. I'm not an accountant, so I'm not gonna. I don't have that kind of degree, but like my company is set up as an LLC S Corp, so the shareholders take draws on the business, but that doesn't show up on our income statement. So this model that I showed isn't there. So I have to create a cash flow model like below. And like here I say, maybe I would add another line and I would say owner draws or distributions. And, I pay myself, $3,000, and I can make this ending cash balance take that account by subtracting that draw I take for myself. So that's something you can do for the cash forecasting if on the cash side. But on the income statement side, I think I'm a little bit out of my depth because I'm not too sure how your financials are set up. I'll have to look at it.
Right. Anything else you want to touch on before we open it up for any more questions, or if we have any more comments as well too? I know we had a comment for clarification, the one that we were talking about with the cash forecasting. And so with the forecasting, it's the cash forecasting, correct? Just want to get some clarification on that.
Correct. So yes, this is forecasting. So, as you saw, as I went through the steps, is I gathered historical data from QuickBooks to create a baseline. And then I converted those static numbers into formulas. And then I created a new model that was forward facing for future 12 months. And this is a projection of the income statement. This is what we call a pro forma going forward. And I can create multiple versions of this pro forma depending on how we feel. And you can make that pro forma last longer than 12 months. You can make it go 18 months, 24 months, how long you want. I use this regularly, not just because we're in a financial crisis. I use this for budgeting to help me. Sometimes you're like, hey, maybe I want to, well, in better times, I want to buy a building, my own building, and I think times are good. So like, let me get a mortgage. How's that look? Next year, I think I'm going to go 20% better. But what if I miss my projection? Like, what if I miss my projection and I'm actually 5% down? Can I still handle that mortgage? So these things, this isn't just used for like bad times. And I find that if I go through this exercise, I'm like mentally armed to answer any question that my banker asks me to justify my loans. It's just such a useful tool. That's why I call it a stress test. It stresses you out, but then you kind of can see, can my business handle it? And can I make a case for someone to give me money, like whether it's to find an investor for my business or to get a loan, family or friends, like, yes, I'm going to survive. I can pay back my bills. It's so useful.
Well, also, we want to make sure we get your feedback as well. And so I'm posting a link on the site right now. You can post your webinar feedback survey here with the link. We encourage all of you to fill out this survey to give your feedback. That way we can take better course of action for future episodes, or if there's anything we can do to kind of pivot, because we're all kind of pivoting right now in this current environment.
And I know that I went through this really quickly, and this is a convoluted and for some very dry subject, but I'm available to answer your questions. If you don't understand how I set up this worksheet, you can email me. My email is at the end of the slide presentation, and I can type it in right now. It's yuh-mei@domistation.org. Please, I'm here for DOMI. We're here to help people in our community, and we definitely want you guys all to be thriving, and we're here for you.
Yeah, I mean, and I've seen a lot of organizations and a lot of nonprofits and people from the private sector collaborating right now, more than ever in particular. And I think that is what's going to help navigate this uncertain time, is by everyone collaborating with each other and looking out for each other just to get through this pause in the economy.
Yeah, and we're always looking for feedback from the community. If there's other topics you'd like us to cover, like if you want me to attempt to do a cash flow, I don't know, but I'll have to find some people to help me do one of those. And for some reason, I don't know why the comments eliminated the hyphen in my name, but that
might have been me.
Oh, okay. I just published it, but there's a yuh-mei@domistation.org if you have any questions. And I'll stick around for another 5 minutes we've got here, and keep throwing us questions if you got it.
Yeah, we actually have some comments and questions as well too. So we have your email address. I think I have that correctly up there now, right? Just want to make sure.
Yes.
Okay.
Yes, those of you who are looking for that Excel template, both the presentation slide and the Excel template links are on the top of the live comments. So if you can just scroll up to the comments, you can see that. Or you can email me and I can send you the link directly.
And we have that on the screen right now as well too. Okay, so we've got a few comments and questions. So we've got a comment from Robert saying all the nuts, bolts, and cogs.
Hey, Robert.
And then we have a comment from Seminole Sitters. So grateful to have stumbled across this. Can we still get the Excel template if we miss the Eventbrite sign up?
Absolutely. You can just email me. or follow the link on the top of the comments.
Perfect. Is there anything else you'd like to add for today? Maybe any last comments for encouragement or anything that you'd like to say to your fellow business owners out there? Because I'm a business owner, I'm listening as well too.
Just that I know a lot of people dread doing these things, and I think for me, it's just nice to be able to put a box around the uncertainty, and like, don't be afraid when you do these scenarios, making it as ugly as possible, because if you know how low it can go, it's just, that's what it is. And that's, knowing that is better than just leaving that uncertainty out there. And once you know what it is, you can actually take action and do something about it. So don't be afraid to do this. Don't be afraid of asking questions. We have a great community, tons of mentors at Domi. They're glad to help you, and we're here for you. So don't be afraid to reach out to us.
And I mean, right now is the perfect time to be doing this, because we're all, having to stay home, stay selfie. This gives you some busy work to do, right? And then the benefit in this, like you said, when you do look for investors, or when you are looking to see if you can hire more people and add to the workforce, then you have everything right there in front of you to just say, okay, yep. Or you can say, I know how much I have right now in my fixed cuts, or what I need to budget for. And so that is a very useful tool to have when you're needing to provide answers quickly.
Mm-hmm. Yep.
And then you know your business. Look it up in your hands. All right. Well, thank you so much for joining us today to take that financial stress test for your business. And Ime, we are so grateful to have you here. And obviously, if you've got any additional questions for her, you can definitely email her at her email address. It's listed here. Well, it's yuh-mei@domistation.org. We've got a comment from Barbara Westcott, and it says, thanks for all you and Domi do to support our entrepreneurial community.
Thanks, Barbara.
All right. And thanks for watching. And look out for any more helpful webinars that Domi Station will be having in the near future. Everyone have a wonderful day, and thanks for watching.
Thank you.